All right, all right, all right. How are we doing, everybody? Let's get to it. I don't know if it's going to be a good recording today. Let's see what happens. Quick shout out to everybody in the chat. Thank you. Let's get this on. How's it going, everybody? Appreciate it. Welcome from the road. A little bit of a head cold, a little bit of a broken phone, crappy internet, but I'm having a good time. Hope everyone else is having a good time. Can I get a little sound check? Greetings, everybody. Tony, what's happening? Kyle, Victoria, Tony. Sound okay, everybody? You know, I'm not on my home setup, so it's going to be not the same quality as before, but as long as you guys can hear me, we need to talk about a couple critical things. Other than this nasally voice that I have this morning. Let's look at total crypto market cap. Let's get into what we have to really assess from Harmonic Pattern Framework. You know, folks, I've been talking about the malaise that is coming for the year. The malaise, what's a malaise? Technical malaise. It's when the market really doesn't want to do anything other than vacillate up, down, short, reactive moves. And then we don't really see a heck of a lot of progress either way. Maybe like a grinding market, which really after Friday, that did some technical damage. Meanwhile, crypto is trying to hold at what we talked about, which was this ancillary yet important retest of your massive crab pattern XA level. Basically, we're looking at a retest of the 1618 off of that little hitch move, down move from November into that lower zone of about 1.77 Actually 1.7. Let's get the exact number. 1.715. Did we get down there this morning? I hope so. That's what we need. We need to see 171. Was that tested this morning? These minuscule measurements mean a lot. The fact that we have to get to 1.71, where were we this morning? What was that low? Was 173, 172. What are we talking about? Well, we're looking for a resolution of this massive zone. And the actual exact XA level, let's just highlight it because we know we've been in a type 2 return. 1715. Let me remove this. That XA level comes right there exactly. We felt just shy. Just shy, which is not, I would have preferred to have seen that hit and then start to do some kind of resolution here. My concern, so we look at HSI coming back into the zone here. Our indicators are nowhere near suggesting this has been yet to be confirmed. We have to look at HSI to come down and do a full test, which it very likely will probably over the next few days. I don't see much. Look, I've been talking about the fact that this is going to take time. Forget price, time. And in that time, you could do a lot of other things than sit here and watch this crappy action. I don't think there's anything until we have full retest that we get to that point where we can say, okay, type 2 return has completed, light switch goes on. We start to move. We start to look for development phase of a larger potential turnaround. No doubt these type of malaise conditions where we are, really struggling to find conviction. There's not conviction in either direction here. There has not been conviction since essentially the March low, which we know ran into a couple patterns. And that's the issue here, is that when we're talking about reaction reversal dynamics with harmonic patterns, folks, yes, love these moves. Love. Real sweet, clean moves. Okay, up to your targets or reactive thrusts. But now, as we talked about last week, we in this type 2 return where the minimum test at 1715, we came within a hair of that. This morning, it's going to have to get tested, and we'll probably get a secondary HSI. Look, the green arrow. This green arrow here and there, we talked about that last Thursday, where we have successively higher HSI readings. That's the start to something, not necessarily anything immediate, but at least that's a good development sign of higher HSI readings and total crypto market cap that will still take time. I think these type 2s show you when you come back after you finish your reaction phase, you come back, you're going to take a lot more time. And that's where we are. You're not going to escape it. You could you could drag in here for 3 months. But still, the levels matter. And we'll get into a couple of markets that we covered recently and some interesting new developments where we simply need to understand Bitcoin is in this massive consolidation phase that will go up and down. It's going to have thrust up, thrust back, but the net of this all, not a lot. And it's again probably even more so of why you need to be patient, extremely patient, waiting for your setups than to chase. You're not going to be able to buy a breakout and have it run. It's just simply not going to happen in this market. You got a lot of other pressures you did not have 12 months ago that we have flipped This market environment is the antithesis of last year, and I don't think it's going to flip back for a while. It's not like a year from now we're going to find ourselves in an improved situation. It's going to be a challenge, folks, and I don't know if I think the last 10, 11 years have been such a kind of as they say, used to say, a halcyon market, especially the first few years after QE 2013, 2014. People were complaining that it was just drifting higher, drifting higher. Well, now you're going to have some challenge on the downside. And I think it's, going to be just a lot of grinding action that will be frustrating. That if you're looking for big moves, not going to happen for a while. You're going to need to see a whole lot of development, whole lot of consolidation. In fact, we go to Ethereum here. Let's go to spot price. Again, coming back down here off the Gartley. We know this Gartley, not the prettiest of Gartleys. We had a reaction. It held the hop. Clearly, that 26, 24.50 range, these lows have to hold. And I'm okay with this dragging action as long as we do not violate this immediate uptrend on Ethereum. Ethereum's probably needs to be watched now. Cannot break that uptrend. We don't have any HSI anywhere close. That it still needs to consolidate. The other thing that I always like to highlight, the simple fact of looking at your RSI, or in our case, amplified RSI variable, still in a downtrend. Not to mention, I'm just going to highlight the indicator. There's the 50 line in our amplified RSI. That's going to be your most responsive relative strength indicator of any indicator that gives you a relative valuation of the prior methods, of the prior readings. And until not only can this break out, but can this get back above the 50 level to where we start acceleration? Until we're in that area, we're not, you just can't really anticipate much. So, welcome everybody. Got a bunch more people jumping in. Thank you. Um, yeah, I am stuffed up today, and I've been late every day. And the last I jumped on a vacation, kind of vacation. Yeah, vacation. Got out of town for the first time since you know what, and it kicked my butt. So I've been late. Usually we start at 11, 11:30. Now it's been 12:30. It's already 12:48, folks, East Coast time. I will do my best, and I know for a shout out to most of the people that watch this later at night. Uh, again, appreciate everyone tuning in, learning a lot of questions about harmonic patterns collection. I'll get into that in a minute. Let me just kind of bring that up so we can take care of the business and take care of the questions. It's something that I need to do a better job of communicating with folks that where to start. I assume everyone knows harmonic patterns only because I do this all the time. Been doing this for decades, but there are people learning about harmonic patterns every day. So go to Harmonic Trader, folks, harmonictrader.com, register now, become a basic member, and then that gets you into the obvious place of uh, all the resources, the books, and everything. So I appreciate everybody bearing with me during these most recent week or so. But again, everything starts there on the basic membership page. Get the books. The software, too, I just want to mention a few people have had some issues. Folks, please read the directions. Everything, like for example, if you want to install MetaTrader, you can install any of these, but please read the directions of how to set up. Everything is there, and we have all the videos, stuff like that are there. Um, so check that out. And again, if you want the trading view, I think starting with trading view is the best way to go. And just send your email for the 14-day trial. So again, thank you. Great to see everybody. Ziggy, what's up? Appreciate the comment. I'm right on the NASDAQ, but it's not there yet. Yeah, it's going to take time. Look, I'm not crazy. Look, I got some flack for saying that Apple would go to 146 and it went to 147 and change. Um, and I think some of the other ones, well, we got the sell off in Tesla, right? That's what we talked about Friday or Thursday. We talked about Tesla as a sell. Hey, Miss Stephanie, thank you for your patience. Loot Patient, what's up? Mr. Lodak, thank you. And Argo, Glass, Crypto Hoarder, great to see everybody. Thanks, everybody. Appreciate you, everyone coming out. Next week, I'll be back into full swing. Of course, I'll be here tomorrow and Thursday, but we'll get our act together next week. And I hope to get cleared out of this head cold. This is really a bear, if you will. Let me highlight one or two other cryptos that we've been looking at. Look at this KNC. This is probably the strongest crypto in the whole dang market. And I'm not saying issue any longs because we've been trying to break out, but look at the volatility. The best way to look at these puppies, KNC, probably one of the best. If you're looking for long side, KNC is about the only one running. Pull up your 5 minute chart and trade it. Trade it. 5 minute time frame. Lots of patterns there. Let me get a better data feed. Very good trading view. The trading view, I like these. The Binance and the trading view accumulated data versions seem to be really good for reflecting spot price. We talked about KNC, and here we had a really nice type 1 on the 5 minute just in the last 24 hours. There's your type 1 hop level, about 477 up to 503 at target 1. Come back down for reaction. That's it. Reaction done. And you had a little butterfly come back for type 2, right back to the hop. I've also been noticing that with the crypto, folks, no confirmation at your terminal bar. You have to wait for the hop and HSI. With crypto, it's been overrunning its zones quite a bit. For example, here's Kyber on that 5 minute chart. Been seeing a lot of these. Okay, your 1618 is right there. But folks, do you see any green arrows here? No. Hop level 472, but then it doesn't come in until your HSI arrow, first one, doesn't come in until there, 477. Don't worry so much, and it got a big flush before it even did anything. That's crypto. That's why I would favor hop positions, and I would only trade these short term. Just not anything trending either way. So you're getting a lot of reactive moves that set your limit order, take it out, be done, move on with it, especially if you're a type 1 situation. So thank you, everybody. Thanks. I appreciate the shout outs. Really happy people are getting a lot from the streams that we're doing. Um, I want to do more. Miss Stephanie knows my frustrations. She knows that I can only do so many things in a day, and you know, I do have more news, more things coming out. Just let me get my act together here. Didn't expect to not have a good setup on this trip, so it's been a little challenging, but we're making progress. And again, get on Harmonic Trader, and we're gonna get with the Discord. That was the other thing. So go to the Discord. If a lot of people were looking for that Discord link, it's on the basic members page, and just sign up. Great, got 1,400 members, 350 online. I'm really happy to announce that we finally crossed the 20,000 member mark. We've got 20,000 basic members. So there's a lot of people out there that are basic members. And I'm really happy that we're building this community. That we just crossed that. I don't really do the count thing, but there's a lot of harmonic traders out there that really know what they're doing. I mentioned on Thursday some of the shenanigans I've experienced with quote unquote New York people on the street. I'm going to say this, folks. Okay, I said this on Thursday. I'll put my patterns against anybody. I'll put the framework even better. the framework against anybody. And I just implore everyone in these sessions listening that you are on the right track to being able to develop an understanding, a framework of price action that if you ask yourself the right questions and you're able to respond in the correct manner, meaning you recognize the reaction, you manage it accordingly, you don't sit on your hands, you take action, you make decisions consistently. This is how you develop your experience, your strategies, your skill. And people see that, people working with the software are able to read the levels and say, okay, hey, here's what Scott's saying of this is what should happen in a reaction. This is what we should be looking for in a reversal. So I think those strategies have been able to reach people so that they can understand and walk through the framework without too much confusion. No doubt you have to get with the software to respond to the levels. Let's quick look at Tesla because if you weren't here on Thursday, it was quite clear what our plan was for this stock, which was look for this thing to come back and do the full type 1 down to target 1. We had a bullish HSI, but we were talking about a hop retest. We had a couple readings there, and we're not seeing. Look, if those earnings were going to be stellar and game changing in terms of setting off a new move, we don't get it. We don't get it in the corrective structure, and if anything, let's just tell me what it's doing at the pattern zone. Forget everything else you know about Tesla and how cool or not cool Elon Musk is. I don't know. I don't know why people don't think he's cool. Um, but the guy's doing amazing things, and he's a hell of a man. But the stock doesn't matter. Okay, I don't care. All those narrative things. The patterns crush the narrative. If your narrative and your patterns are diverging, you go with the pattern framework. And that's what we talked about in Tesla. As good as their numbers were, positive, everything, it was a sell. It was a sell because we were clearly stalling out at this butterfly. We're in a reaction move. Down to 910 is our target 1 level. I'll stay with that. You're trading 992. We were as high as 1085 in the aftermarket on last week. And we knew it's not an opportunity. And it's the Tesla's is a prime example of a market where you can get so hyped up and everyone's hyped up and then they're completely wrong because they're not in the right area. The pattern framework has not set up to put you where you need to be. Now, I would say Tesla might come down and I would be looking for a bullish pattern down in this area off this reaction to set off any kind of larger move, but it's not there. Like the rest of the market, it's just not in the right position. And we're seeing things, a lot of different markets where they hit major numbers. They're reacting, they're giving you clear signals that, hey, this isn't a long opportunity. Okay, and just here's another one related to Mr. Musk, our Twitter. We talked about this. That I still feel like this is just a tradable. Just trade this puppy. 5 minute. I was even saying 30-second on some of these markets, but a 5 minute or 1 minute, I still felt like Twitter, was a tradable vehicle. I'll go back here. We had this really quick. I had this crab pattern, okay, down at 38, 37, even though it overran it. I talked about why this target 1 level, and let's highlight that, 51.93 was so critical. And you have an HSI test. So there's the zone. That's actually a nice picture of it. All right. The target 1 at 51.93. You have an HSI reading. Okay. Reaction done. This reaction that started way down here off that move is done. Now, are they going to get bought out? Maybe. And then maybe that gets you a little bit higher. And then game over. Twitter's done. But from any kind of a larger standpoint, you don't have it there. It's just not there. It's you're at the end of that reactive move. Now, if they take out the market and they buy out the company, well, it's over. But this is still just a reactive move. That's all. Keep an eye on it. I don't. I would like to see that happen. I think a lot of us we had a little discussion. Are we communists? Are we capitalists? You can be left, right, or center and still be a capitalist. Okay, and I don't subscribe to any of those. I'd like to be a nonpartisan person. I'm a The market is that's my politics. The market every day, keeping the market a good, solid market. That's what I believe in. I'm not really. I don't ascribe to the other forum or circle. And I think it's all of us here. What are we doing here? Okay, we're trying to give our lives value of learning these skills that you don't learn in any school. There's no business, not even in business school. They don't teach you charts. They don't teach you technicals. All right, it's amazing how that it goes, but that's the case, and that's the education that you're getting here. I'm not even going to flash my disclaimer, but this is not financial advice. This is entertainment. I hope you find educational. And the best thing I can do is consistently show you opportunities within the framework that enforce and reinforce the concepts. So let's get to a couple more. And I wanted to go to uh, crude oil, obviously, because we have that big reaction. Let's look at the XLE. And I mentioned last week I was selling into this. I sold chunk of my Chevron. I sold chunk of my Marathon. I sold a bunch of those, and we're seeing why a lot of these hit the major moves. XLE, can we get that? Come on back. Where is it? Let's look at the 1 year, 5 year. Yeah, XLE just hitting up against the prior highs from 2018, essentially the 886, and a good place for a pause, not to even go get crazy and worry too much, other than this is hit an overextended move, and we're just pausing here. Real sizable gap down to start the week. So that will continue. I think with all of these markets, I have been saying that we could go the whole summer, folks, and go into just a grind from now till August in a lot of these markets where beyond a 2, 3 day move, you're not going to be buying and holding, quite frankly. That is just the way to think about what this is doing. The markets, and even some of our strongest markets, we talked about Coca Cola on Thursday, that it was at all time new highs, but it was approaching critical, the daily pattern here. Check this out. Where'd you go? Where's my daily pattern? It was a 4 hour. I had a big pattern on Coca Cola up here. Maybe it was a weekly. What was that on Coke? Anyone remember? I have to look at that. But this is the big number, folks. We just do a simple. Oh, I know what it was. Look, it was the butterfly. Why? Because remember that B point was at a 786. We traced that out. And we were looking at a 127 to 124, 142. 127 sits right there at 65 and change, 66. All right. Why? Because your B point is at a 786. Software is not picking it up. I think I had a crab or something. Ah, geez. I don't I'll have to go back and look. But we were talking about that. It was impressive. These were at all-time highs. This will deliver some earnings. Was that earnings today? Sure was. That earnings was today, and they beat. That it would rally into earnings, and that is absolutely what we're seeing, and that they're going to sell it off after earnings. And I think much the same way for Walmart. Walmart, another strong stock, but at what price? This is where I think some of the lessons of the market really come in. The non harmonic pattern, harmonic trading lessons of patience, of respecting the framework. Here we go with Walmart. Earnings. Earnings are early May. That's right. Mid May on that. So uh, we talked about the crab pattern, this getting overextended a little bit. And on the daily, yeah, look, this is an ideal setup. And we want to see this with every pattern that's generated. It's why you need the software. Plug, plug, plug. But get the software, get the trial license. Why? We are looking for this sequence of events in every situation as the ideal conditions. There's your pattern completion, followed by a red arrow HSI that helps to confirm this whole area 157.70 to 158.30. Yes, we're that exact. Looks like that, where we get the check back, and then we look for the return or the reaction, which is gives us Walmart down to about 149.78. I'll look for that, hopefully get some kind of bullish pattern in between to set this up. But this is a great example of what I've been talking about of how this summer could go, where we get a lot of reactions that don't spend a lot of time reacting. They pause, go to target one, and then we come back, drift up for a larger retest, which can be a real problem later in the summer. I thought, I think we should go to the diamonds quickly. I'm going to run through the major markets today and probably go about another 20 minutes until I got to blow my nose again. But let's look at the diamonds, folks. Okay. Check out the daily. Check out what has happened. We had a bat pattern, and that completed on Thursday in a really tight situation. Find it interesting that the first test here back in March failed, which is a real bugger because some people get into pattern situations where it'll fall just shy. Remember the Nasdaq from back in March where we're looking for it to go to 12,880 and it went to like 13,040 and then now it's rolling over again? Yeah, I think that just means we'll have something like this where we come back and retest again. I'll look at that in a second, but the fact that the Dow has now just gotten slapped at that swing 886, and then the way it's coming off of here, we want to really be careful. Take a look at the 334 level on the diamonds. That's basically 33,400 on the index. Folks, this is such a critical week. Why? Because Friday was a devastating blow to the uptrend. Devastating. And on individual stocks, some of the big ones like Microsoft and Apple, well, not Apple, but Microsoft went to new lows for the year. A lot of those went to new lows. We saw what happened to Netflix. These things that's bear market stuff. That's bear market material. And for the Dow, because the Dow and the S&P have really held up, you know, these will be the last to go. And I think you have to go back about 2 weeks, maybe 2 Mondays ago. I outlined where the big downside accelerations will happen. It's under the March lows. For the diamonds, again, three under this 334, I'm going to start to be concerned because this will turn into a larger move. If we don't see a reaction today, tomorrow, we need to be up several hundred points by tomorrow to at least plug this hole for now. But the larger event that is just starting to take shape is a rather large broadening top on the diamonds, zero progress, and again, you come back under March lows, you start setting new lows for the year. This is going to be the model, the malaise model, if you will, of going back and paying the piper for the COVID money. The COVID money, the COVID retest. There's only two spots, folks. You either do a 382 reset, retest here around 30,000 on the Dow, which I think is possible, another 10% lower. And then underneath that, not to scare everybody, but I would not, it's just not a biggie. It's not, you're talking about just giving back all the COVID money. Full 886, I hate to say, it's about 21,000, 20,000 on the Dow of the COVID low. It's just, nice. Yeah, it's Ziggy's right. Ziggy just commenting, and it's almost May. Sell in May, go away. How about sell in May and run? Or if you haven't sold in May, you probably will be running for the exits if we get this grind. What can happen here in this malaise environment is that we grind and grind and grind, and we just continue to make successively lower highs. And on the Dow, the diamonds, I think this is not really difficult to assume when you are coming off of you know, such a downtrend like that where you've had one, two, third test, cracking lows, cracking lows. And here is something that I have said before that the the lower lows in a bear trend and the higher lows in a bull trend can be more indicative than the progress itself. If you're looking for, clear direction of how it's developing, well, if you continue to crack lows and lows and lows, then you're in a spiral grinding lower. And we know there's nothing underneath here. We know there is nothing underneath this level. The whole market knows it. It's just a question of, will they really give it all back? And I don't think we've ever quite been in a time in my career where we've had such a defined short term multi year range that is so uh, distinct. The COVID low to the November peak, December peak. Did that even peak out in January? Is just the range. We just do the Fibonacci spread, harmonic ratio spread. 382, folks, is under 30,000 on the Dow, and we have some patterns. I mean, it's this little pattern. We're going to follow it on the diamonds because it's coming at a rather interesting point where we've already established a couple peaks. Is this a continuation bat pattern, which is a pattern within the trend, bearish pattern within the bearish trend? I talk about that in my volume 1 book, and there are distinctions. Take a look at that material. Take a look, go to Harmonic Trader here. Let me just show you. Go to the basic members page, get that book, and look at the examples. I mean, it's right out of the book. Scroll down and just go to volume 1. And in those trends, I won't go through the material, but just to click to show you that you can get volume 1, you can get all the books there. But within that trend, to have such a devastating pattern, come on back. This being an uptrend, that would be a large continuation structure. So let's just be aware. That's the scene. It can be difficult. It's going to test people. This environment will test people. Here is Google, folks. Let's look on the weekly. Ever since those earnings, ever since they announced this, what is it? What's the Google 20-for-1 split? Can someone clarify that for me? Is Google a 20-for-1 split, or is it or was that 5-for-1? I forget, but this is the deal, and you can do this with every market. Tell me what's going on since the COVID low. Google, great stock, greatest stock in the world, right? You want a tech exposure, you want to be in Google for the long term, you probably do, but at what price? This concerns me because of you've cracked the downtrend, you came back, retested the underside of that trend, and you broke the lows. That's a kind of a Wyckoff technique. It's some people call this a little bit of a hook up here where you get a divergence at the top, but for me, what does the failure on Friday, and it would just happen Friday. What this means is it triggers the BAM B point. If we can trace out, let's connect dots. Let's go off of, say, let's just go off the low from a year ago. There's X to A. There's your B point at about a 382 or 40. You know that's going to be a bat. Come back down. Where's the 886 on this thing? 1800? 1850? Thanks, guys. Ziggy, Lodak, Arun, thank you. It's a 20 for 1 split on Google, but I don't, it didn't help it. If anything, it's going to make it easier for the big boys to secretly slide out of the stock as we do the BAM move, bat action magnet move. Really, this is the thing that happened for me. Friday sealed the deal. It really was that devastating, technically, to take out these lows like that. Then you trigger that action magnet move down to your 886. Now, one way to look at this is tell me where your X point. Ideally, we want like a 50 level in the bat. So, if that's your B point there, let's just kind of back trace where the perfect 50 level is. It's like right there, right about, right about there. And so that corresponding 886 would be like that, right? If you connect the dots, if you will, with the true harmonic off the top with Google, you're still looking at 20% lower. Absolutely, Ziggy. Yep. Google or Apple is next. Apple will be the last one to go. Apple, we've talked about this daily up at 175, big hop time frame. Beautiful back to back dynamics going on here. We have your hop level off of that crab right there, 175, and then red arrow, both of those HSI. Remember, we had this beautiful bat pattern on the reaction, didn't get down to target 1 at all at 146. It bounced off of that bat alignment, but again, reaction, just reaction right there. Up for about 12 sessions, rolling back down. On this one, book it. Just book it. We're in a type 2 return. It could be, if this was any market, I would still say this. Okay, that it's in a return phase off of that bat pattern, still needs to hit target 1. All of that points you to 151, as low as 146 on this move. But I would not be surprised to see that come and hit the hop at 142. There's no opportunity here, folks. That's the takeaway. No opportunity on this. Thanks, Claire. Claire's saying yes, earnings coming up. Earnings this week. We got to see how that shapes up. Earnings are in 3 days. Thursday. Likely come down and hit that 151 by earnings. Again, all of that is shaping up within the harmonic pattern framework of not really being what we want to see for market expansion. If anything, these are telltale signs of more time required. And if we're in a downtrend and more time is required, then simply the fact that any long position is going to be a real challenge. Flat out. Real challenge. Let me pull up one other one. The other one, what was the other one I wanted to pull up? Oh, you guys did it. Let me see here. Oh, here's the other one. We looked at the banks. Okay, and this is more a reflection of big cap stocks in general. Goldman Sachs, folks. Here's a beautiful pattern right off the top, especially the ABCD dynamics. You're back down at that hop level already. And this is something I pointed out last week where that's where your reaction was on Goldman Sachs. Take a look. Terminal bar is there on Goldman. Okay, does the reactive move. We know it likes to come back and retest for the type 2, which it did all the way down here at 315. 315 is your number. And we had the check back of that green arrow. Remarkable. Literally happened this morning. Almost exactly 313.50. And the problem I have with this is that we just bucked a bearish HSI against that bullish trend. And again, another nice pattern off the top that if this fails, it's going to be lead to a larger flush move. Just not where you want to see something doing what it's doing on a type 2 move and failing to get out of the zone. And that's just another one of the big ones that just showing you lackluster action. Not a lot there to really concern yourself with. One or two more. There was get back here. There's one more I wanted to look at. Let's look at UK oil. UK oil, same. This is just a general large. This is Brent oil on the daily. Not the greatest. You could look at light sweet crude. You could look at Brent, but we've had three real clear peaks. Remember, that was the all-time 886 that we retested. We went into a pause, and I think one top, two tops, three peaks should take us down, bring us further. This correction's not over by any stretch of the imagination. I still like crude oil longer term. We just went way too fast, way too far, way too fast where you have to pay for it. You have to pay for that move. Claire's asking, do I think other sectors would still be going? I don't think many sectors are going to go. I just, 2 points. One, I've been talking about this malaise concept where you don't do much. You don't get a lot of progress other than, reactive swing moves within predictable support resistance ranges, but you're respecting the larger trend, what that's saying. And crude oil, since the pause up at the 886, has not given us anything. We knew that that would be a pause, and we talked about that, but we didn't get any development between that pivot peak and now. Nothing. I mean, even on a 4-hour time frame, anything there? Nothing. Another example, a super hot, if not the hottest market, going cold quickly. We saw that what happened in the tech, and now they're just, taking turns. Here's Nvidia. That was the other one. Why Nvidia? Well, major patterns. There's your 4-hour time frame. And this is back-to-back situation, the 4-hour, but I know there's stuff here on the daily. There you go. Check out the daily on Nvidia. Probably the strongest chip stock there is, respecting harmonics. You can't escape it. You're not going to escape reaction reversal dynamics no matter what. This was our first reaction on Nvidia after this big peak up here at 320, 340. That was the run from October until December. and then you ran right into the 886. Ideal type 1, type 2. Where are we going? All the way back down to this hop level 174, 175. Yeah, short term trading, Snipes. Great one. Absolutely. We want to be just short term trading. Excuse me. When I get back, that's what I will be focusing on. I talked about, we did a session 2 weeks ago called Harmonic Pattern Workout, where we just walk through the framework of harmonic patterns on the 1 minute futures charts. We will do more of that effort. And don't underestimate that ever, folks. Don't underestimate the amount of effort required to day trade. Why? You have to pace yourself. You'll do what I did, not take a vacation for 2 years until you want to puke. And then you go on vacation. He's not going to get away. I'm never going to get away from the markets. But the day trading stuff, you got to pace yourself, and that's what I feel like with the stocks, or even crypto. And as I said, crypto is about time, not price, and that will continue to be. But when we see clear situations and levels responding, you look for secondary tests down here. Again, the larger opportunities will be at the hop level. That's where I'm waiting on this. And even if you were impatient, you have to ask yourself, are we to the right of the downtrend? If I was really hyped up on Nvidia, is that to the right of the downtrend? No. And until that is, I'm not concerned about anything. The larger moves will take time to develop. This is nowhere near being ready to go, despite being, now what are we, 30, we're good 30%, 20, 30% off the high. We're going to see a lot of that. One or two more that just to kind of follow up Netflix. We are now looking for Netflix. This look, let's just look at the trend. Netflix is in trouble, folks. Massive bearish breakdown gap. Don't even fill it. Another bearish breakdown. And we were looking at this Netflix because if we were going to connect dots and we were looking at a COVID low retest, this is the poster child of what kind of bad things can happen. And I think I think Meta is next. I'll go to that. I said that on Thursday and I'll say it again here. COVID low, where is it? There. No, sorry. There's your COVID low. It's a little bit different depending on what market you're looking at, but let's connect the dots. X to A to B, nice big 1618 to your top, a vicious divergence. That's a real vicious divergence up there at the top, 700. Now you take the form of a shark pattern, which is a minimum 886. We know that, but a lot of times goes to that 1.0, somewhere around that 298 to maybe the 320 level, somewhere like that was the first possibility. But tell me what happens when it gets there. This is a big thing. A couple people have mentioned to me about how to put this together, how to connect your dots. You know what measurements are needed. Look at the books, follow the software, the auto generated levels, because that does it all for you. But then the key is what's going on. You ask yourself, what's going on at the 886? What's going on in this area? Basically, your 886 was at 324. Look what happens when you hit 324. It gaps right through. Then what happens to the 1.0? Further technical damage. This is, if you were assuming a shark, your shark has failed. And that's a big failure deep down. It happens, though, in much larger moves that when you fail your immediate time frame, folks, I just did something really bad. I removed all my indicators. 1 second. 1 second. I'm going to switch back. I can't even think. I'm thinking through my sinuses right now. Here we go. Let's go back. Did we get that? All right, good. We didn't lose it. But when we fail on our immediate time frame, you go to the larger time frame. Okay, for Netflix, I again, not necessarily Netflix. This is the other version of what's going to happen when the larger market falls apart. Go to my weekly, go to all time. And this is something I mentioned on a lot of the stocks that have come out. I'm not just saying the last 2 or 3 years, I'm saying the last decade. And a lot of these major stocks that have done this move, that if you're not going to hold your COVID lows, there's Coldvid right there. Coldvid 886 on Netflix is what we say 320, 300. All right. If that's not going to hold, Netflix is not going to continue the long term uptrend, which is like this. You're in big trouble. You are in big trouble. And again, I want to apply this to all of the major trends. If it's Zoom, if it's Meta, you're going to do something like probably, I would say something like this. Come back for a full 886. Is that crazy? $50. Can Netflix go to $50? It's the first time I've ever said. I think it can. I think if we get a meltdown, if this malaise continues, you're going to get something like that. Now, do I say jumping short? No, not yet. Not we'll get another opportunity with Netflix, but these are the possibilities of if something much larger takes shape, you have to be ready for it. You have to kind of entertain the thought first so that you can respond more readily later. Here's Facebook, Meta platforms, Zucca land, whatever you want to call it. Okay, looks like it's a great pullback within a long-term uptrend, right? Let's just draw that long-term uptrend. All you need is one more bar down. That's a monthly chart, folks. Monthly chart. This is what happened in 2020. Sorry, 2000. In 2000, if these fail and we have a crab, a deep crab off the top on Facebook, basically this 185, you're almost just at the point where if you take out the year's lows, the March lows, whatever your market is, you're going further down. You're going further down, and certainly I'm not. I don't think there's a long opportunity here. Maybe some kind of reactive low reaction for 15 or 20, but there's not a swing opportunity here. Couple more. Okay, you guys are still itching for crypto. You crypto crazy people. All right, I'm going to take a couple crypto and then I'm going to roll out. Doge. Check it out. Doge doing things. Hey, who said that? Yama? Thank you, Yama. I own a bunch of Doge. And again, thank goodness. Beautiful candle. All right, Doge. Way to go. One of my few crypto that's actually working. What is Doge? Well, Doge, as I said on Thursday, is pure speculation because the richest man in the world is going to try to make this into something. And that for me is about as far as I'll take any fundamental argument. It is how I got into this in the first place. Actually, big shout out to my buddy John, who was he is the composer of our Madcaps. He's the leader, founder of Madcaps. He's a guitar player, the guy that actually you listen to every day as we start the show. He's the one that got me into Doge a year and a half ago. Johnny, if you're listening, I'll catch you later today. But this is still about time, not price. And we're all the way down here. Basically, Big Gartley off of everyone knows this move that we were in. I mean, geez, look at that. It's amazing. I decided I'm going to do a Doge special, like a retrospective of everything that we did from there to there and there next month. Because it was a hell of a ride, and I think there's a lot of takeaways that people see, like the real stuff that I was doing. Um, It'll be a gas. I really think you can learn a lot from it. But I still say that Doge is going to take a lot of time. Glad to see it popping hard. Up what, 10% now? 15%? Okay. Probably because Elon's going to try to bring it in to Twitter and the like, but what's here? Still tradable. I know what's here. It's the type 2 return of this Gartley. Yeah, that's we're looking at that. And I still say, as beautiful as that is popping hard right now, I would not expect that much above this current hop level, go to 16 and change. But you're squeezed between these pattern ranges on Doge. And that's all right. 1650 on the top side, down here around 1350. I got down as low as 1250. 13 is that's your support. This is what I mean about reactionary moves is that this type of reaction, once we get up here, maybe as high as 17 and change, like a sharp 886 move, 17, what is it, 17, 20, 40, then come down again, then go up again. Just be ready for it. Okay, the moon scenario is not going to happen. You're not in that position. I think it's something where people are need to understand that last year was such a one way kind of analog market where it was just on or off, on or up. This is zigzag, stair step. So that's a great one. My basis on Doge is my recent position, I think, is around 13, 13 and a half. If we can get up to this 886, and I'll let you folks know, I might take it off. I might just take the 4 cents. If it's really going to do something, it would have to explode and unquestionably just annihilate your levels. This is, I do see something here. I'll do this and one more and I'll show you. But if we just take the 4 hour time frame, this is not going to surprise me if we get something like the following. We've got a shark connect the dot scenario. So there's X to A. Where's our extreme low? There's the first low there. Come back up, down to the shark at a 1618, almost like that. Then back up to your 886. Yeah, 17 and a half on this move. But I just think it's, reaction. Perfect example of a reaction. Something I would love to get everyone excited about and say, let's have a party, let's ride Doge. It's just another reaction here. It's going to take more time. Uh, one or two more. I will get this cleared out. Someone wanted Gala. I do. I think this is a good one to talk about. This is another hype crypto. A lot of hype. It's a yes. I see someone's also posting on Hex as well. Uh, but Gala has had a couple of nice moves. Just trade these puppies. Look at your 4 hour Gala. No, I know Gala has something on the daily. Check this out. Are we on the right feed? Gala, maybe it's the 4 hour chart, and I was thinking Hex. There's your 4 hour. Let's just look at the 4 hour. Okay. Gala has your clear type 2 coming up here with a bat pattern off the low down around 14.7 cents. That's where I'm looking for it. And notice the 4 hour patterns that came in here, back to back situations. Crab pattern of 1618, back down to the 886. This, again, reinforces the whole theme of reaction. This is going to be reactive summer, if you will. And if you do not seize the profits and take them at the levels, you're going to be a bag holder. Quick type 1 reaction. That's a 6 cent move. That's amazing percentage wise. Doesn't look like much on the chart, but you come back down and you ran into target 1 again. And look, Here's the thing you have to ask yourself. If you're in a harmonic pattern position, you executed, you're hopefully at the terminal bar with confirmation. Simply start counting bars. Tell me what happens 30 bars out. There's 95. There's 30 bars. You hit target 1, no follow through, you're done. Type 2 taking much longer. The type 2 officially started when you hit the 20-cent level, but nothing there yet. Again, there's been several of these crypto that I've highlighted that are going to have to do work at your long term numbers. Many of them are all time 886s. Gal is another. There's 886 on Gal all time is what? 12, 10, something like that. I do not own it. I do not own it. Oh, you got to be kidding me. That Ape Coin's been running? I have not seen that since I left. Oof. Let's look at your Ape Coin. Again, I like to talk about these because we cannot underestimate the speculative nature of these stupid moves. There's nothing here except for a pool of buyers willing to throw money at it all at the same time. I did mention this on Ape a few weeks ago when it first came out that it could be something like this B point, come back down, and then you go to your 886. So you could play the B point on Ape at 16 bucks. That's your bam trigger of this bat move like that, and then run the gap. All right, so this is one that is in position, I would say, to shoot that gap for a bam breakout to your 886, a little bit higher, but I will personally come to your house and curse you out if you ride that and don't seize profit at the 886. All right? Knock knock knock, I'm coming. But again, if Bitcoin just holds its head, Bitcoin at 39,400 at the moment, if it just holds 40,000, I think Michael Saylor's having a party. Every day the market goes down and it holds 40. I think 40 is the number they're trying to defend here. Beyond that, I don't know. Yeah, my friend, yes. Argo Glass, you're right. We need to look at gold before I get out of here. Already been an hour. Welcome, everybody. Thank you. I'm doing my best. I want to keep this going. I just, you know, life. Life. I think you all know what I mean. Can't do it all. Gold, bigger pause. Gold getting whacked again today. The pause continues. We had this crab at 2068. 1925 was our low end number. What happened on Friday? Geez, a lot of things happened on Friday. Actually, this was Tuesday. We triggered HSI. Today, Friday, Thursday, Wednesday, Tuesday. Not a biggie. Look, gold's still up. Trend for gold's still up. It's just how long is this reaction going to take? We tried to come back up. Nope. Come back down. Maybe target to 1831. That would be pretty standard for gold. Gold's never going to rage. I do agree. Someday gold will get to 5,000 an ounce. But that could be 5 or 10 years from now. I'm still looking for an eventual return within this trend back up to 2172. I would look for this. We actually might get a bullish pattern back down here. Let's see. What's the 4-hour chart look like? Now, back-to-back bats. More time. More time, guys. This is, again, I want. Why do I say this with more time? So that you can temper expectations. So that when we get moves like Doge running right now, all right, that's awesome. And it's going to roll right back over probably. But Doge running now, again, just be aware it's a short term temporary move. If we can get to that 886, that would be about it. Don't look for more, is what I'm saying, until the larger market can really work itself out, which we have some things, and some influences of this market that is not positive. You don't have the market you had a year or two ago, which is a shame. And this thing could have been just rocking for the next several years, but instead, no. We're gonna have to deal with some nonsense, quite frankly. Um, There was one other. Oh, Qs, Qs. Okay, need to look at the QQQ really quick. We're down here. This is my point about Nasdaq and all tech stocks that it's not showing up on the Qs. Because it's pending. It didn't complete. But remember, the Qs, same as the Nasdaq and a lot of these, it's all about this 1618 extension. Uh, on the QQQ, it's at 310. 310. And then maybe you get a reactive phase, something like this, and then back down. Now, why do I say that? Again, to make you realize what is the harmonic framework. If we can get down to 12,880, that's the NASDAQ 100 number. On the Qs, it's about 310. We would still have to go through the 1-2 approach. You would still go through that reaction phase, up, and then back down for the retest before a larger situation can take shape. That's the framework well in advance. I mean, we're targeting levels still far away, but understanding that it's going to have to hit that number and then do a consolidation for 30 bars. Well, if you're looking for this market to go up, it's nowhere even close to doing that. Here's last one, and this is probably most devastating of all, PayPal. Look at this chart. This reminds me of the .com nonsense. This and Netflix and a few others, Meta, okay? It came out in 2016. Really important that everyone recognizes a lot of these massive high flyers that came out in the last 10 years or 5 years are totally vulnerable. They are showing you that there are problems and that in terms of a technical harmonic framework, it will not resolve itself until it does the full reset. PayPal, and 3 months ago, 4 months ago, I would have never in a million years, I would have thought, oh, PayPal might do a full reset to the 886. Guess what, folks? PayPal is in the process of doing a full reset down to your 886 and then test it again. It's going to be like that. You're trading 86 now. 886 is at 48. That's another one. Looks like a lot of these want to go to $50. Netflix is probably, I'm not throwing out price targets, but I will explain where the full levels are and how we get there. And that's the best way to think about it. Don't think about the story, don't think about the narrative. Describe the framework, describe what's happening. Are you in a reaction, reversal phase? What's going on here? You're in a full reset phase. And there's no B point, there's no pattern here. So, whatever that means in terms of the broader indices, especially tech and Nasdaq, I wouldn't even think about PayPal till $52. That's amazing. Absolutely amazing. So, again, that's where we are. It has happened quickly. Did we know? There's the COVID low. There's your COVID low, straight up. So when COVID hit, COVID low was 85, where we are today. PayPal has come all the way back, given it all, and it went amazingly up to 300, back down. When you see that kind of move, if it's a 5-minute futures move, or if it's this is a 4-year, 3-year monthly chart, you have to understand the gravity of that distribution bell curve. That's all that is. This is a distribution bell curve coming back to the right side of the bell, and you're going to have to work out all of this. There's no opportunities in this market yet, folks. The opportunities will be at much lower levels after a reaction and reversal. Though, for me on Friday, it kind of sealed the deal with a lot of these just failing, getting obliterated, and it's not something I like to talk about, but we have to be real with this. I do want to show really quick that I think everyone should be looking at this volume 2 book as well. Uh, there's a couple of books. Few people have asked me, what are the best books? There's 4 books here to start with. This is all free, by the way. Click on the PDF. Yes, you can buy the physical books, but for to really dig in, because yes, there is a lot of material. If you want to learn about confirmation strategies and understand failures, pattern failures, look at volume 2, please, and go back and look at how we look at the relative strength. Here you go. Looking at confirmation, and this I'll talk more about this tomorrow. Why is the confirmation so important? Because if you don't get confirmation and you don't get your variables to line up with the pattern, you're probably looking at a failure, which again means you kick up to the higher time frame. If you're on a daily and you fail, well, tell me what the next weekly set of numbers are, because that's where you're likely going. Also, wanted to show this. I was referencing volume 1 earlier about patterns in the trend. It's in volume 2. It's I just passed it. Look at that as well. These are things and considerations that I don't think people look enough at or consider. And I will go through this because we're going to want to look at more of these pattern failures or patterns within their trend to get a clear direction of how far these bear moves are going to go. And you're going to see a lot of stuff like this. Uh, there we go. Failed pattern within a downtrend. All right. This is in volume 2. This is page number 144. But we'll get examples like this. Okay. You get a downtrend, you get a bullish pattern, and it fails. That means you're going much further in that predominant trend. Here's the other one. This is the type of pattern we're seeing now. Things in like the Dow. I showed the Dow today. This is a clear downtrend. Okay, get a bearish pattern within that downtrend. Crab patterns within the downtrend are perfect scenarios for major continuations. These are some of the things that I think we want to look for. If we get a rally, let's hope we rally on earnings, because if we can't get a rally on these earnings coming up, we're going to have problems. I mean, this is going to lead to a larger set of structures that point to much lower prices. It's how this is coming together in a rapid fashion, rapid succession, if you will. And for me, Friday was it. Friday really hit a lot of these stocks in a major way where, okay, like something like PayPal, I wouldn't even look at it until 6 months from now. September, October, something like that. So that's what I have for today. I appreciate the rest of them. Yeah, Darren, I'll look at bring GME and some of those other ins tomorrow, folks. I'm glad we were able to do today. I'll be back tomorrow, probably around 11:30, a little bit better. Hopefully, I'll be clearer for everyone. But again, check out the information on Harmonic Pattern Collection and the Discord. Go to harmonictrader.com. That's where all the answers are. And again, people sending me emails, please give me 24 hours. I will get back to you. I just haven't been as responsive, but I've been pretty clear that I'm not full time this week. Later next week, I'll be back. So until then, thanks everybody. Great. I appreciate the session. Just set your expectations a lot lower than where they were a year ago. And we'll get more into it tomorrow. Thanks again, folks. Have a great one. See you tomorrow. Go get them.